last year, they did rather quick letting their allies on board, countries like the Netherlands, South Korea, and Japan, and now they're going to try to prevent some of these U.S. firms from exporting their chips to these other countries. So that's part of it. And then the other part is the fact that in August, Huawei was able to launch a new smartphone using a very advanced semiconductor. And there's a feeling that something needs to be done, even though it looks like Huawei was able to develop its new smartphone through homegrown semiconductor technology. But there's definitely a feeling that the U.S. had to do something in response to everything that's been going on here in the last few months.
What exactly does the U.S. plan to do to fill those loopholes?
Well, one thing the U.S. is going to do is it's going to restrict exports of these kind of chips, especially the accelerated type chips. Those are using AI, large language models, being exported to the overseas units of Chinese companies. Also, U.S. companies that wanted to export to other countries like the Netherlands and South Korea are going to have to get a license as well in order so that there's no way around these sanctions.
Alan, thank you so much. Alan Wan there, of course, on the very latest ongoings in China. Now, here are some of the other stories that we're watching today. Australia has voted overwhelmingly against including First Nations people in the country's constitution, rejecting a proposal to set up an Indigenous advisory body to Parliament. The Prime Minister, Anthony Albanese, is facing a struggle to reunite the country after the failure of the measures, one of his key campaign promises. Now, the heir to a fruit exporting dynasty will become Ecuador's next president. Daniel Noboa beat his socialist opponent, Luisa Gonzalez, in a runoff with over 90% of votes tallied. It was Ecuador's bloodiest presidential election in living memory after one candidate was gunned down while campaigning. Now, Noboa will now prepare to take on Ecuador's economic issues and political instabilities. And New Zealanders have picked a centre-right government to manage the mounting economic challenges in the aftermath of the pandemic. Now, Christopher Luxon is set to become the nation's new prime minister after his National Party won the lion's share of the vote in Saturday's election. Now, let's switch focus to U.S. banks and bank earnings. Well, J.P. Morgan has posted another quarter of record net interest income and boosted its forecast for the year. However, the chief executive, Jamie Dimon, warns the economic outlook is getting cloudier, especially given raising political risks. Well, let's get more on all of this now with Bloomberg's Charlie Wells. Charlie, I mean, you do this so well. When you look at the reports on Friday, what really stood out?
Well, Francine, we kind of went into this earnings season almost feeling like it was that dreaded dentist appointment. And we actually got there, and there were no cavities. It was actually a lot better than people thought. So there'd been so much negativity going into this third quarter. We had the regional banking crisis earlier in the year. We had all of this volatility in the bond market. And also, bank stocks have been really underperforming this year. But we saw at J.P. Morgan, they had a boost from that interest income. Same thing at Wells Fargo. And then a group at Citigroup, actually, a trading group at Citigroup actually overperformed.
So what are you expecting from Goldman Sachs and Bank of America?
I mean, very different banks, right? I think with Goldman, we've got that investment banking focus. I think there is some expectation that they could get a lift from equities underwriting. We've seen more activity there, which we've been hoping for a really long time. Bank of America, I mean, they have more exposure to some of these long-dated treasuries, so there could be some surprises under the hood. But given Friday, it's seeming like a rising tide is very likely to raise some of these banks as well.
Yeah, it's incredible. The U.S. economy seems strong, Charlie. Thank you. As always, Charlie Wells there with the very latest on the U.S. banks. Now, the rout in the U.S. government bond market can also be attributed to the absence of all of its anchors. At least that's according to Mohamed El-Erian, the chief economic advisor at Allianz and Bloomberg opinion columnist.
Monday, Tuesday was about dovish Fed statements, lower yields. Wednesday, Thursday was about somewhat hotter than expected inflation, higher yields. Today is about geopolitical concerns, lower yields. So that's the easy answer. The harder answer is that we have lost all anchors to the bond market, all of them. We've lost the economic anchor, we have lost the technical anchor, and we've lost the policy anchor. So what we're seeing is this enormous volatility. So far, we are lucky in that when we have overshoots, it triggers some sort of reaction. If yields go too high, some people start wondering about locking in higher yields for longer. if they suddenly go down quickly, those who have been caught offside with massive positions, loss-making positions, take advantage of that. So the good news is there is a certain amount of range-bound dynamics, but nevertheless, this sort of volatility is simply indicative that we've lost all anchors for this bond market.
Well, let's talk about another anchor we've lost and another situation as well. Yesterday was a two-part story. You're right to point out CPI, small upside surprise, yields start to drift higher. Then we had this really soft 30-year auction in the afternoon. Mohammed, have we also lost predictable sources of demand when we get supply from the Treasury?
Yes, we have. And we're facing higher supply from the Treasury. So the most important buyer, the non-commercial buyer, the Fed, is out. The Fed is a seller. That's gone. And don't underestimate the importance of a non-commercial buyer that buys in very big amounts and that is predictable. So the Fed is gone. There's questions about overseas buying. Japan, China. Big question marks, especially about China. And then there are the traditional buyers who have been caught offsides by buying too much when rates were artificially low. So there is a real question out there about who's going to buy this additional supply. And if the economy does not weaken, then the path of least resistance for yields is higher.
As things stand, Mohammed, then, does this compromise the Fed's approach to monetary policy?
Look, the Fed's approach to monetary policy has been compromised for such a long time. The minute you're late and the minute you mischaracterize inflation, you then have to go faster. And then you accelerate these dynamics that are taking place. So it certainly complicates it. I think there's a lot of question mark about this narrative that has settled into the market. Don't worry, the Fed will have to do less because the market's going to do more. It doesn't quite work that easily, but it is a very complicated policy outlook.
All right, let's also talk a little bit about football. Manchester United is falling significantly pre-market. I think it was down some 16% at the open of the pre-market, now down 13%. And this is after the Qataris have said they will withdraw their bid for the club. Now, coming up, an exit poll suggests Poland pro-EU opposition is on track for a majority, ending 8 years of rule by the Law and Justice Party. We'll get the latest live from Warsaw next. This is Bloomberg.
The deal was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
The conversations that matter, the insights you need. This is A Pulse. I'm Francine Lacqua here in London. Now let's take a look at the European markets map. A lot of the focus, of course, is on a possible escalation in the Middle East. What this brings or what this means for the markets, frankly, is completely unclear. And when I was at the IMF World Bank meetings, a lot of the market participants were saying if anybody really game theories what it means, they just don't know. So it's very, very difficult to make a call right now. What we do know is that the markets are somewhat fluctuating. I think the UK is holding on to some of their gains. A lot of the focus is also on everything that we've heard from, of course, treasuries and this higher for longer idea